Bitcoin forms a death cross. Is another sell-off on the way? Hackers steal $53 million worth of cryptocurrency from CoinEx. Are we next? The SEC charges stoner cats in the latest move against NFTs. Okay, that was obvious. That was pretty obvious. All right, serious question. There's so much bearish news, but why did I invest 50% of everything I have for investment purposes into a low liquidity, low market cap altcoin? Pause. I understand I look like a scammer. I get it. But I just wanted to take a second to appreciate the mustache. Wow. And I also paused this video to let you know that when I say 50%, this means I have been using a risk management strategy. Please, this is not financial advice. No matter how much you want it to be, it is not. And you need to use risk management with all of your trades. I've been thinking about this for months. And I don't look like a scammer, okay? Well, the answer lies in the Federal Reserve Ponzi scheme of us making money nonstop for free forever. We live in a new modern society where money can be printed out of thin air and stock prices could go up forever and ever. In this video, I'm gonna show you 3 charts to why I think the market is completely bullish. And regardless of the short-term noise, I believe the cryptocurrency I purchased is gonna do numbers. It's gonna do numbers. We're like, why is it going up? The macro environment's bad. What's going on here? And it's like musical chairs. And I am going to sit in a chair. Not going to miss out. If you appreciate this content, like the video, subscribe to the channel, and share it with a friend. If you're smart, turn on the post notification bell. There's a little icon you can click and get notified when these videos come out. That's smart.
You smart. You loyal.
And on a serious note, I just want to say some wisdom. Whoever is patient has great understanding, but one who is quick-tempered displays folly. Let's be patient, because remember, at the end of the day, cryptocurrencies, on average, the top 10 go up by 900,000%. Let's not be short-sighted and think short-term. Make the wrong move and give away your bags at the lowest possible point in the market. Let's be wise and understand the longer picture, because these asset prices do numbers and we're all degenerates anyways.
So let's get this money.
Big news. This was huge for me. I was wrestling with this a lot. And what we're looking at here is the death cross that recently just happened. Let me scroll into it for you. So a death cross is basically an indicator that shows the 200-day moving average and the 50-day moving average moving simultaneously together. When you have the shorter time frame, which is the 50-day moving average, come down and cross the 200-day moving average, that is considered a death cross. If you have the opposite effect, where the 50-day moving average comes below and crosses going up the 200-day moving average, that is a golden cross. This death cross, it's a very, very bearish signal. It's supposed to bring asset prices down substantially. Now, what I have here is this blue line right there. This is, I believe, in the short term, the lowest it could possibly go. Now, I have a different thesis and narrative. For the longer Bitcoin perspective, I have a complete thesis. I've talked about it before. I do believe we're going to have a monumental, very quick dump. Very, very quick dump. I don't think it's happening soon. And I have exact indicators that predict when it's going to happen. I've talked about it in another video, so make sure you're watching all of my videos. But what I do want to show you is that that dump right there, down to 20K, let's say hypothetically, it does play out. Remember, at the end of the day, is only a 27.78% dump. I know for a lot of people, you're like, wow, that's a huge dump, Alex. And although I didn't go to the bathroom today, I will say that in the world of cryptocurrency, that is really not that big of a deal. I mean, we've seen crazy falls. From the top here to the bottom is a 76% fall, right? In cryptocurrency, 20% falls, 25% falls are not out of the ordinary. But what I do know is that if you look at altcoins, and you look at the altcoins specifically in the top 10, for example, right here, top altcoins from the peak in 2017. So I went back to 2017 at the exact top of the cycle. I looked at the top 10 altcoins and just look at some of these percentages here. We're looking at 5,701%. That is 136,000%. Dash went up 700,000%. Litecoin went up 37,000%. Monero went up 243,000%. Neo went up 272,000%. These are just the top 10 altcoins. At the bottom right-hand corner, you can see that I averaged them out for a total of 337,000% on average in 2017. If you look at the altcoins at the peak of the 2021 cycle, Binance Coin up 252,000%, Solana up almost 5,000%, Dogecoin up 81,000%. I mean, we're talking about numbers that are unheard of. Let's be grateful for what we have. And I took the average of that cycle, and you could see that we have 1.47 million on average in 2021 percentage increase. So let me ask you guys a question. Bitcoin dropping 27%. How much does that actually mean to you? What are you going to do with that? I actually averaged both cycles out, and you could see that altcoins on average, if they make it to the top 10, move up by 900,000%. That's like turning $1,000 into $9 million in on average 960 days, which is usually how long the cycle lasts. But people are worried about a 27% drop. How much does it actually mean to you? Like, honestly. But even if we look at the death cross, for example, I want to show you something. We're approximately 222 days away from the next Bitcoin halving. That's an estimation. But if we look at the last Bitcoin halving, right? We're looking at Bitcoin here. We go back to the last death cross. Why did it happen almost identical time periods? 197 days was the last death cross near the Bitcoin halving. Now there's another one here, but look at the volatility. I want you to understand something very specific. Look at the volatility. Death cross, golden cross, death cross, golden cross. There was literally so much volatility that I believe it was manipulating even this indicator that is widely used by a lot of people. And it's because at the bottom, these big time whales are looking for places to enter. Imagine, I want to give you this scenario. Let's say you have $1 billion. Look, if I go over to coinmarketcap.com and I go to Bitcoin's price, let's say it's not just you, but a group of maybe 50 investors that accumulative have $1 billion to invest in Bitcoin. Look at the volume in the last 24 hours. That's 549 million on Binance, which is the biggest exchange for Bitcoin trading volume in the world. If you bought $1 billion worth of Bitcoin, you would move the price up as you bought it. If you were reckless and you're just like, I'm going to buy it, I don't care, I'm not going to do any preparation, I'm just going to buy as much Bitcoin as I possibly can, you'd move the price up and it would actually give you a less favorable price. You'd be buying basically on top of yourself, which is something they do not like to do. So what they do is something called enter liquidity. Don't be enter liquidity. It's the opposite of exit liquidity. Enter liquidity is when they pay news outlets. And I know this because I've seen it before. They pay a whole bunch of news outlets to make it look really, really bearish so that people sell and they actually buy it up. People will sell their bags and they'll buy it. And what happens is we have a sell-off, they buy it. It keeps the price stable. Sell off, they buy it, keeps the price stable. How do you think they enter the market? And this is where you see situations like this. Now, obviously you can't prove it, it's impossible, but this is the conclusion I've come to with my experience of being in this market for 8 years. This looks very manipulated and not reliable. This death cross was not reliable. It was not reliable because we have a golden cross here. It's like, okay, yeah, if you take the death cross serious, you got to take the golden cross serious. And that golden cross was definitely not reliable either, right? A lot of manipulation around this section here. You know why? Because the Bitcoin halving was right around the corner and they're all trying to get into their positions. They're trying to get into the positions. They weren't going to let the price drop too far. Why? Because of the supply shock. There's not enough Bitcoin on the market. It's as simple as that. And I think it's very, very interesting that we have a death cross around the same time period. And it could be actually the same exact time period, depending on when the Bitcoin halving actually happens. There's not a guaranteed date, but around the same time horizon, we have another death cross here and the price pumped. Who do you think's entering those positions? think. I don't believe the death cross signal is very reliable right now, specifically considering the factors I just told you, considering the fact that the Bitcoin halving event is 200 days away. It's absolutely ridiculous that people are even thinking bearish right now, to be honest with you. We're worried about small percentages when altcoins go up 900,000% on average in the top 10. Here's another thing that's very interesting. The volatility S&P 500 index. If you're new to this channel, we look at the S&P 500 index as another form of Bitcoin, not exactly Bitcoin, but just basically an indicator to show us where risk on assets are going. So Bitcoin is considered, and all of the altcoins are considered risk on assets. So when the S&P 500 goes up, typically the altcoins tend to follow. It's just a very good indicator because it has way more data, way more price history than Bitcoin itself. So I look at it a lot of times, and I look at different indicators like the volatility of the S&P 500 index, right? This shows the volatility. This shows how much trading volume is happening, right? Now, the thing is, whenever we have these monumental spikes, I want you to, not the little ones, but like the big ones like this big one right here, that typically signals a bear market. If I pull up the S&P 500 right here next to it, I want to show you guys. Let's look at the actual big spikes. So this was a big spike here. This was a monumental crash. Like, that is big. This crash is 35% on the S&P 500. A little bit more than that. I think I mismeasured it. A little bit more than that. That's pretty insane, right? Let's scroll over a little bit, right? This was a crash as well, but I'm talking about the big spikes like this. If you scroll over here, let's put this on the monthly time frame or the weekly time frame so we could actually see. Right there, look at this big crash. This 40% crash, this monumental crash right here, 57% crash, had a big spike in the VIX, or the volatility S&P 500 index. So the point I'm trying to make here, let's pull it up on the VIX, is that typically, why do we see big spikes? Because people are panicking. People are trying to get out of the asset. There's a whole bunch of trading going on, and everybody's freaking out, and they're trying to get out of the asset as quick as they possibly can, which causes the volatility to spike a lot. Now, I want you to look at the volatility now. You guys tell me, is this going up? Is this a trend that shows that it's going up? Or is it a trend that shows that it's going down? You tell me. That's going down. Now, I want to show you what we typically see on these big spikes. Look, this is a small trend going up. Look, higher highs, lower lows. Simple. This is simple stuff, guys. There's nothing to overcomplicate. Same thing here. Higher highs, lower lows. Actually, this one doesn't have a higher high. This has one high and then it spiked. But look at the lower lows. Very, very clear. Very, very clear small uptrends before the major spike. Now, let me ask you a question. Do you think this is going to make, this is a lower low question. Yeah, this is a lower low. This is a lower low. So this is technically a downtrend. From even technical indicators, this is a downtrend. So what I see here is that there's actually volatility decreasing, which, if you understand what volatility is, it's simply a lot of people trading. That's what it means. And if you think about the rich versus the poor, the majority are less fortunate and the minority are rich. Meaning, in the market, there's few people with a lot of money and there's a lot of people with a little bit of money. So right now, when the volume's dropping, who do you think is trading? The big dogs. This is what they look for. I said it on my Twitter. Follow me on Twitter. I'll leave the link in the pinned comment below. I said it specifically. I said, look, when the demand is low, that's when you want to buy. Everybody's bearish when we're in a bear run, which is supposed to be, common sense, right? It's a bear run. I'm going to be bearish. But you got to flip the script. You have to flip the script. The time to be bearish is not in the bear run. The time to be bearish is at the top of the bull run. This is the time to be bearish. The time to be bullish is here. This is when you want to be bullish. You could be right for the internet all you want to get the likes, the clicks, or whatever the case is. But for making money, you got to go against the grain. You have to go against the grain. You cannot follow everybody around you. If you're following everybody around you, it's actually a red flag. If everybody's saying the same thing around you, then you gotta question yourself, like, okay, is this correct? Am I thinking the right way, right? Now, I want to show the last chart. I've talked about this multiple times. When I say something, I want to follow it up with something that's conclusive, something that's definitive. Like, I'm going to really give you an answer, like a real answer. I'm not going to just say, oh, it's bullish. No, I have a legitimate answer behind what I've been telling you guys for so long. If you look at the S&P 500, which I told you guys is the index of all of the tech companies, it's basically the biggest indicator for stock market. Not exactly, but that's the best way people look at it. There's one measure to measure the entire stock market. It will likely be the S&P 500 or the Dow Jones Industrial Average. The S&P 500 is the one that people usually pick, and the one that's closer to crypto assets. So if we look at the Federal Reserve interest rates, I've said this in so many videos, but I know there's new people watching, and I want to remind the people, the older people that are listening to what I'm saying, so that you guys have some confidence here. You got some confidence. And I give this chart out, by the way, in CoinPix Inner Circle. But if you look at the exact big red days, right? Look at these big red right here. Believe it or not, the red means printing. Believe it or not, but this red, I color coded this chart for the red to mean dropping interest rates, which means printing. The yellow means staying the same, but the green means the opposite of printing, or increasing interest rates. If you would have listened to the same type of narrative, and this is what blew my mind the last time I looked at it. Right here, white means 0% interest rates, like 0 to 0.25. This is like the lowest interest rates can go. I mean, there's been places in other sides of the world that had negative interest rates, which is ridiculously weird, but we don't see that in the United States. We see 0% interest rates. So the white is a 0%. So we had right here, look, a big period of white, a big period of white. Then we had them, what, right here, increase interest rates, stay the same. Increase interest rates, stay the same. Increase interest rates. So they're increasing interest rates. Similar to what we're experiencing here, big period of white, then they're increasing interest rates. If I want to show you something, if you would have followed the mainstream narrative of what everybody's saying right now, which is basically what? Hey, they're increasing interest rates. It's going to cause asset prices to fall. You know what's funny? It kind of did right here. But that's only 25%. If you look at these big historical bear markets, they're dropping 40+%. This was like a 50% drop. And by the way, the red is printing. They're printing. These is like a 55% drop, I think, or something like that. 49% drop, 40% drop plus is when you see these big printing events. Why? Because it's panic. When you're printing, they're printing because they're trying to solve something. It's like an emergency room type of situation. Like, it's an emergency. Let's print as much money as we can to fix the whatever thing that's going to break. That's why we see these big panic events and an entire market crashes, because everybody freaks out and panics. And then you go to the VIX and you see the volatility spike because everybody's panicking. Do you see what I'm saying here? The current narrative that I'm hearing when it comes to the bearish side is very, very short-term noise. Very short-term, nothing that really sings to the tune of what the numbers are saying. The numbers are saying that they print money and that it's a very, very big, crazy panic event. And that's how we see 50% drops. We see 50% drops because they print money and it's a very big panic, crazy panic event. Does it feel like a big panic event? No, actually the numbers are saying the exact opposite. The volume's dropping, meaning there's less people trading. There's less trading going on. This is not panic. This is slowdown mode. This is a great time to accumulate assets. And that's what I've been trying to voice on the internet. Here's another thing I want to show you guys. So if I pull up just the simple, I'm going to pull up the S&P 500. Here's another chart with no type of color coding or anything. I just want you to look at that chart, right? Just look at it. In terms of the historical price, what does it do? Right? What does it do? It goes up and to the right. And there's very few periods of time where the market goes down. Look at this. Look at that. it goes up and to the right. So we can't play the consistent bear market game. I know a lot of people got hurt pretty bad with this monumental fall. And this is why I tell you, and I'll always say, listen to someone that's seasoned and that's gone through multiple bear markets. I've gone through 2 bear markets. The reason I say that is because the emotions get very, very wild. It gets very wild. In the bear market, the times that I bought, like when I was back here, do you really think the market was telling people to buy right here? I bought this dip aggressively, I would say too. Do you think the market was telling people to buy this dip? Do you realize that I was questioning my life? Because this entire time from like over here to over here, I've been promoting cryptocurrency from 2015 all the way up to this moment here, 2020. So 4 years I'm promoting cryptocurrency, talking about cryptocurrency, making money off cryptocurrency. And then it drops like this right next to the Bitcoin halving. Bro, people were questioning their lives. They were like, yo, are we scammers? Am I a scammer? All of my emotions were telling me to not buy, to like sell everything and just stop talking about crypto. But instead, I pushed through. That's the important part. If you've never experienced the emotional roller coaster of a bear market, it's going to be very hard for you to just learn your way into it. You cannot just learn your way into that. Some things you have to experience. See, look, you can open up a textbook and you can read about how to bench press. You can read it. You can learn the exact form. You can learn exactly how you put your hands. You can learn exactly what your mind should be thinking about. You can learn all the muscle groups in your chest and your shoulders. You can learn exactly where to pivot your triceps. But at the end of the day, if you never bench press and you get on a bench press, you're going to not do well. You're going to drop the weight if you try to bench too much, and you're not hitting 225. That's for sure. It's the same thing with people that haven't experienced the bear market. I say this very selectively because I love all of the influencers in crypto and I want people to all flourish. But please, if you've not experienced a bear market before, just take 1 second and lower your pride. Lower your pride. I would never sacrifice the potential for people to make money on a 900,000% return with 200 days left in the next Bitcoin halving for a 26% drop in Bitcoin's price. That shows me, for people that are bearish, that are getting out, they're trying to short the market, that really shows me how little you understand Bitcoin. Because when it goes up unexpectedly. It goes up just crazy amounts out of this world. And like, you can't time some of these events. You have to understand where you are. Number one, you're in the crypto market. You have to understand what strategy you should be using in the crypto market. And a strategy, I believe, should be birthed in the crypto market, not something outside of the crypto market. And you have to understand how to control yourself in this environment and in the execution of the strategy. And you have to relentlessly follow through. So I'm here to tell you guys, I want you to win. I really want everybody watching this video to win. I want you to win. I don't want you to lose. This is not the time to get scared. This is not the time to be fearful. This is the time to be patient and stack bread so that you could buy the dip even more aggressively, even if it does fall. Remember, I didn't go all in. I have a large lump sum of money waiting to deploy if we do fall a little bit shorter. And again, I'm going to finish it off with this. I have an exact indicator that's going to tell me when the market's going to fall, which is when they start printing money. And we have an FOMC meeting coming up on the 20th. And on the 20th, they're going to say, hey, we're going to lower interest rates and print money. If they do that, I will sell everything and short the market. But if they do anything else, which is pause interest rates, or if they increase it more, which I think they're going to increase it more because inflation's not slowing down, I think they're going to increase it a couple of basis points more. If they increase it more, this is bullish according to history. Remember, If you played the same exact narrative that's going on right now, right here, look, December 2015, they're raising interest rates, guys. Let's get out of the market. They're raising interest rates. It's going to be harder for people to make money now because you can't borrow money. Look, December 2015. Let's go to December 2015. If you played that same narrative, December 2015, and you know the crazy part about it, right next to the Bitcoin halving, you would have missed out on the entire bull market. Like you would have missed out on literally everything if you followed this narrative. If you followed this narrative, you literally missed out on the beginning of the entire bull market. So I don't understand why when people say, hey, they're increasing interest rates, harder to borrow money, it's harder to print money, they're not printing any money, asset prices are going to fall. It doesn't show that on the charts. It doesn't show that. Does this look like asset prices falling? Does that look like asset prices falling? No, that's asset prices increasing. On the contrary, when they print money, the assets price fall. That's how it look. That's the numbers. What do you think? I made this chart up? Go do it for yourself. Look at interest rates. Open ChatGPT or find data. Ask ChatGPT all of the interest rates and exactly every FOMC meeting and their decision, and color code it for yourself. And look, you think I'm lying about these numbers? This is facts. This is every decision the FOMC meeting has ever made about interest rate policy since the year 2000. And it just looks like every time they print money, the market falls. Not the opposite, but it's understandable that they would definitely want the masses, the mainstream media, to adopt that narrative because it makes them more money. Of course, they want people to think that when they print money, that's the time we're going to go in a bull market. Yes, it's true. It works over time, though. In the beginning, that's when we have our fall. That's when we have our bear market. Over time, at 0% interest rates, the printing brings the market back. But at first, we have a monumental dump. And if you notice, one thing I just want to show you guys, and this is very important. The dumps are happening quicker and quicker. This dump right here took what? 1,000 days? This dump took 500 days. This one was quick. 55 days. So how quick do you think the next one's going to be? It's going to be a flash crash, and then we're going to go back to the moon. At the end of the day, we're living in a modern Ponzi scheme. I don't know what else to tell you guys. It goes up and to the right. That's how they made the modern financial system. They all just want to make money. They are just benefiting by investing with themselves, all the tech companies investing with themselves, corporate buybacks, buying their own stock, getting printed money from a bailout, then buying their own stock, inflating the asset price and going up and to the right. And that's all they do. It's a game of musical chairs, guys. It's a game of musical chairs. I'm not going to bet on the downside of this crooked financial system when everything is created to go up and to the right. It doesn't make sense. Statistically, it doesn't make sense to be a bear. It doesn't, especially not at the bottom. Don't be a bear at the bottom. Be a bear at the top. That's how you make money. But that's pretty much it for this video, guys. I wanted to get that out to you. If you appreciate this content, like the video, subscribe to the channel. And like I always say, if you don't get with it, you will get left behind. Thanks for watching this. Catch you guys in the next video.